Welcome everyone to this week's community call. We hold these community calls every other Tuesday at 9 a.m. Eastern, 1 p.m. UTC. I know it's been a little bit since we've had a community call, but I was on vacation and then I had some unexpected delays getting back. So thanks everybody for their patience. I will jump into the agenda for today's call because I have quite a few things to go over. I'm going to talk a little bit about some of the claim events, some of the updates to the docs, some info about FTX claims and Euler Finance claims. Summary and an update there. I'll talk a little bit about commissions and integrations, staking pools and pricing in V2. And then on the update side, we'll hear Hugh's weekly update from the foundation, the last week in review of cover sales. I'll talk about the new Dune dashboard that the R&D and marketing teams from the DAO launched recently. I'll do a highlight of the discussions that are active on the governance forum. I'll talk a little bit about the Nexus Mutual V2 UI feedback that we're looking for. And then it'll be an open forum for anybody who would like to bring anything up, ask any questions about V2 or anything in general that we don't cover on the call. I will jump right into things and talk about recent claim summaries and provide some updates. Just want to highlight some updates to the docs. I always have claim summaries after claim events happen. Of course, as new claims are filed, I always update those, but I've updated certain sections of the docs in regard to claims. For each cover product, if you look at protocol cover, custody cover, and excess cover on those pages near the bottom, I highlight the total claims paid per product so that you can see that on an aggregate level. I have an overview of the claims process for claims filers for each one. That'll be improved over time, and I'm going to be working on some guides that have screenshots and are things that are specific to how to file claims for each product. As the UI is improved, I'll have those added screenshots in there, but those guides will be coming soon for anyone who's curious about that process or wants to know a little bit more about how claims work in V2 because they're slightly different. On the claims history side, on that general page, I've updated the claims paid to date figures. You can also find an updated history of all of the claims and the rationale using the rationale in Discord and what was shared when claims assessors voted on claims on past claims. So all of that is updated up to the claim V212. I will update the most recent one with Sherlock's excess cover as soon as that closes later today. And then for claim summaries, I've got one for FTX, BlockFi, and Euler Finance. I've got the amounts that are paid for those, and I highlight each claim, the ones that were approved, the ones that were denied, and then the rationale for the claim in the first place, what caused the loss, who was affected, how the process worked. So those are all in the thread for today's community call as well. And if anybody has any other updates or any other figures they have questions about or things they want added to the docs, please just start a thread in the DAO forums channel and let me know. I'm happy to always add and improve to the documentation. On FTX claims, recently we've had folks let us know, and we've seen some examples of Kroll restructuring, sending out emails to those who had FTX accounts. They've sent out those emails with the official holdings when withdrawals were halted. If you are somebody who had a balance on FTX but didn't have proof of loss documentation, you can now use that to verify account ownership and then begin the claims filing process. In those emails, they have a lot of language. They have a unique customer code that is tied to your asset amounts that are on public statements, so you can keep that privately, and that's still on the public statements that you can look up, but instead of identifying people by name and address, they just have those unique customer codes for folks' privacy. And then the account balance, so the details about crypto asset holdings, what they were, those are denominated in the crypto asset amounts and not in dollar value, so you can use those figures if you're going to file a claim. You can look at the most recent issue of The Hedge, which is also in the thread for today's call, if you're planning to file an FTX claim and we're waiting on that proof of loss documentation. But the first thing you'll need to do is verify your account ownership. You can send an email to claims@nexusmutual.io and share the following that I have here: your full name, membership address, cover ID, the unique customer code, and the copy of your Kroll email, so we can use that to verify your account and the holdings. And then what you can do is you can proceed, once you've verified through the claims email, you can proceed to file your claim, and you can provide those asset balances in your proof of loss, an example, or in the Kroll email with any sensitive information redacted. So the information that you send to the claims email is only going to be used to verify your account. That won't be shared publicly. when you file a claim, you can go on to do that with just the information that you need and no personal identifying information. So we'll be seeing more on FTX claims. We'll also be talking with members who have filed claims and everything on the recoveries process. That'll be an ongoing thing. When I have updates on that, I can share those with the community as well. For Euler Finance claims have been paid out. We had 10 protocol cover claims that were filed and approved for about 2.4 million. And then we had one Sherlock excess cover claim that was filed and approved for a little over $1 million. You can review the summary that I have in the docs. You can also look at each individual claim in the Nexus Mutual UI to see the proof of loss and any information you want to verify. For Euler Finance, as most of you probably know, they were able to recover the vast majority of the assets that were stolen by the attacker. There's been a process that the Euler community has been going through to determine the reimbursement process. When people filed their Euler claims, there was a disclaimer in the UI that said, if you make a successful claim, you grant the right to any future reimbursement to the mutual by redeeming your payout. So we have this in here. I am in the process of working with members who redeem their claim payout for Euler Finance and the Euler Finance community so that when recoveries come through, we can make our best effort to recover the funds up to the amount that was paid out. The ultimate goal of this process is to make everybody whole, trying to get some of the reimbursement back to the capital pool, since those folks are going to be receiving reimbursement from Euler, and then making sure that people who filed claims, if there's a shortfall, that they're able to keep a portion of their claim and just return anything in excess of the full amount. At the end of the day, nobody should be profiting from this reimbursement. The goal is to make everybody whole. Once I have more updates on this, because at this point I'm waiting on the Euler Finance community to determine what exactly is going to happen with reimbursement. They have their Merkle Tree contract that's under audit at the moment, but they're still trying to determine the value of assets and some of the other particulars about the actual reimbursement mechanism and process. So once I have more details on that, I will let everybody know. There's just basically this standard language that's in the documentation that you can look at. But yeah, if anybody has any questions about that, happy to answer once I get through a few more things. And at the end of the call too, I can answer any questions about this. I want to talk a little bit about commissions and integrations. I've got a section in the documentation on this that you can find in the thread for today's call as well. In V2, over time, more people will be able to integrate and allow people to buy cover in third-party UIs. So if you're on Aave, you'll have, if they have an integration there, you can have the option to buy cover at the point where you're depositing right on Aave. Doing this will help us expand distribution, but obviously there needs to be an incentive for somebody to actually want to integrate and distribute cover on behalf of the mutual. And that's where commissions come in. So people who distribute Nexus Mutual coverage in their UI at the point of deposit, nearer to the process, instead of having to leave and come over to the Nexus Mutual user interface, you can just buy cover right where you're deploying funds in DeFi. One thing that people can do is they can add a commission to their integration. And with that, they can add a small fee on top of the existing cover price. And that fee will go back to the designated address that they set up for these commissions. Right now, we have a commission in the official Nexus Mutual UI. So every time somebody buys cover, there is a 15% commission that is directed to the DAO treasury. I've got some figures here. It roughly amounts to, at today's prices, and for NXM, I'm using WNXM price, but the commission amount is about $7,200 that's been earned to date. And when you earn commission, that's going to be denominated in whatever asset people are using to buy cover. So NXM, DAI, and ETH, if it's expanded over time, other assets as well. But this is a way to incentivize people to add a commission and then help us expand distribution. So we have a commission in the Nexus Mutual UI because if other people are going to be putting commissions in their UIs, having no commission in one UI versus other ones with commissions, it kind of levels the playing field for folks who decide to add commissions in the future and help us expand our documentation. On the integration side, I know that the engineering team is working with existing distributors to help with any questions about V2 integrations, helping those people get that set up. so that we can keep our existing distributors and get them all set up with the new V2 contracts. And the engineers are working on resources for teams who are looking to integrate. I'll be working with the engineers to create V2 developer docs that are focused on people who want to launch staking pools, on integrations, on some different resources, and then just general technical documentation on the contracts and how the protocol works. But we'll have more documentation and resources for folks who are looking to integrate in the coming months. Once I have some information on that and I have updates in the documentation, I'll also share that in future newsletters and on future community calls as well. So wanted to share that about commissions, expanding distribution through integrations, and having that economic incentive of commissions is going to be a really big benefit over time as V2 continues to be built on top of, and we expand our distribution channels and our distribution network. And then I just wanted to talk a little bit about staking pools and pricing in V2. I know that we've had some questions about staking pools and pricing. So you can see that there's been an update in the UI. So you can see the pool ID and the pool name. You can click on the arrow to actually go into the staking pool and see the details. But across these different ones, you have the Nexus Foundation pool, which is a private pool that can't be delegated to. Most of these other pools are public pools. There is one, which I believe is the pool ID 9, my conservative pool. That one is someone's personal private pool. Across these different pools, you can see the total amount of NXM in the pool and then the projected pool APY based on recent cover buys. Looking at the different pools that people have, there are resources on the forum. The Ease team has a risk framework that they've shared on the forum. So has the DeFi safety and open cover team. They have their staking pool. And people can launch staking pools. And like we've talked about before, people can also stake and delegate to the various staking pools. If they don't want to manage, if they want to socialize gas costs, they can choose a staking pool that's aligned with their risk level, and they can delegate to them. One of the things that people had asked about when V2 first launched was the ability to launch and manage a staking pool of their own versus staking and delegating. So that functionality wasn't originally in the UI, but the engineers have added that now. So people can go in and create their own staking pools if they would like. Right in the UI, you can see that people have already done this so far. And new staking pools have been launched. So as time goes on, I imagine we'll see more staking pools built on top of the mutual. And then we'll have more people who will share their risk frameworks and their view of risk. I'm in the process of interviewing the different staking pool managers so I can write up some posts for the blog to help people get acquainted with who's building on top of Nexus, how they view risk, how they determine pricing, and some other information. So anybody who wants to know more about these staking pools can read those posts once I get those up. So I'll share more information on that too once I have those finished. But each staking pool manager sets pricing in V2. They choose the products they want to underwrite, and then they choose some of the other parameters. How much NXM they want to stake, how much capacity they want to open up. You can see like the staking weight, which is the amount of the NXM in the pool that they're allocating to that risk, and how much capacity they're opening up. But they also set the minimum price for cover. So the price can go higher if utilization is higher, but that minimum price is the lowest amount that a staking pool is willing to accept for a relevant risk. And that can change over time, but you'll notice if you look at these different staking pools that some of them price certain risks higher and some of them price them lower. And then you'll see the spot price, which is what the price is right now if you go into the UI and go to buy cover. The cover buys are always routed to the pools with the lowest price and available capacity. So if there's one pool that has a lower amount of cover, but not enough capacity, it can be split across those pools. And so you'll see the aggregate price when you're looking to buy cover. But if you go in the UI, you'll see the spot price. Some of them are higher than the minimum price, and that's because people have been buying cover for these. And so dynamic pricing has lifted the price up a little bit. So the nice thing versus V1 is when utilization is low, the cost of cover will decrease and approach that minimum price. Even if there's not a lot of NXM staked, you can still achieve that minimum price, it's just that there won't be a lot of capacity for that risk. If utilization is high, the cost of cover will increase. This acts as a signal to staking pool managers to increase their allocation to certain pools where they're seeing more demand. So it makes for a more efficient market. And if utilization rises above 90%, then surge pricing is applied. Very similar to how you see Aave and other lending markets approach risk. So when utilization is very high, pricing is applied to help control supply and demand, capture more revenue so that we're offsetting some of the risk that we're taking on. And this also acts as a signal to staking pool managers of one of two things. One, allocate more NXM, lower the price, open up more capacity, or shift some of the NXM away because maybe this is something where there's all of a sudden a lot of risk. We saw that with FTX cover buys. If we would have had the system in place, we would have captured more revenue and then controlled some of the demand for FTX cover by ratcheting the price up, which would have protected us from some risk. So between the minimum pricing that's set and dynamic pricing, it should be a more efficient market over time. It's still early for a lot of these staking pools, but I'm looking forward to seeing things happening over time. If you look at the price for a lot of different cover products, you'll see that the price of cover tends to be higher in V2 than it was in V1 because we're seeing more efficient pricing by the different staking pool managers. So it's exciting, but I'm going to stop right here and see if anybody has any questions before I move on. Like I said, I know people have had questions about staking pools, and I know people have had some questions about some other things in V2. So if anybody wants to ask any questions about either of these, just let me know before I move on to the foundation update. Okay. If not, you can always ask questions at the end of the call, but I will move on to Hugh's weekly update from the foundation. So I will turn things over to you, Hugh.
Cool. Thanks, Lee. Hey everyone. Sorry it's been a while for these calls, but obviously a lot going on. I guess on the V2 side, lots of effort on UI bug fixing and UX enhancements going on. I think we've fixed up a lot of the stuff, and as I mentioned before, it was definitely the UI was definitely a bit earlier launched than we would have ideally hoped, but we wanted to get V2 out there as soon as possible. So we're kind of iterating on a few things there, patching bugs and stuff, which I think is going quite well. On the I guess on the wider perspective, we're going to be looking at the staking UX a bit more. It's a bit clunky at the moment, we know that, but it's functional. So we're going to be looking to kind of streamline that, I guess, over the coming months. So that's a big focus. I guess the second big focus from the foundation side on the engineering aspects are going to be tokenomics. So I'll quickly go into kind of where that's at. The kind of, there's a full detailed spec that the engineers are kind of working through at the moment. Just kind of going through and making sure that it works. There aren't any things that are going to throw up big issues that can be done technically, etc. There's a couple of outstanding questions that we're working through, like how do we define a TWAP price for the NXM within the system, because there needs to be a system NXM price for things like staking and stuff. So there's a few bits like that, but largely the core mechanics are kind of there. And I guess in terms of overall process, it's the Ray's posted on the forum, so please comment. And if you have any further comments, it's still kind of open. I wouldn't say that that's closed by any stretch, so please get on and comment if you do have anything there. Right now, once it goes through with the engineers, we'll kind of pick up any outstanding issues and kind of come back if we need to. And I guess if not, ideally we finalize the kind of spec and start building, and then in parallel we can then start more details on parameter settings and simulations and those types of things, because that's kind of the big outstanding thing from the I guess from the community point of view, apart from obviously building it and launching it. So but that's kind of the main, assuming we don't find any big technical problems, then we obviously need to set the parameters. So that's kind of the direction of travel on tokenomics. I guess more broadly on other things, actually a few more points on engineering before I get on to kind of sales stuff. On engineering, there's a few other little bits and pieces that smart contract wise that we're looking at. One is like cover edits. trying to work out the best way to kind of enable them. It's kind of the last remaining feature of V2. We haven't quite got there yet. There's a late bug picked up in the audit, so we just out of caution didn't ship anything there, and turned off the cover edits for the first release, and so we're going to come back and do that properly. So that's kind of the last bit on the engineering side mainly. On sales and BD, yeah, lots going on this front. There's quite a lot of inbound and demand on a whole bunch of different things, and it's often quite hard to work out what the best priority is in terms of actually focusing the team's effort and executing. But we're getting a lot of inbound on this potential slashing coverage. People are quite interested in that, especially with withdrawals being enabled on Ethereum. So we're working with a few people progressing through the pipeline on slashing deals. As you would have seen, there's a decent number of people looking to launch their own staking pools. So that's kind of happening organically, and we're also getting a decent amount of inbound just to understand a bit more about how it works. So that's positive as well. I would say that I think there's two main features for a successful staking pool. One's ability to assess risk, and the second one is the distribution capability. And if I had to pick one of those, probably it's the distribution capability that would win out. So I think that's where we're going to be focusing effort in terms of the foundation team and supporting the which distributors. Also, we kind of paused our new protocol listings, and so we're going to restart those. We paused them coming up to V2 for a few technical reasons. Just made the launch easier, but we obviously want to get back on top of those. And I think one important thing that hasn't that we can do now that we haven't been able to do on V1 is you can actually have a small amount of coverage, like a couple of million worth of coverage or something, at a relatively high price. So that's something that works for newer protocols, and so we weren't able to do that before. And so I think provided there's enough demand for particular protocols and people are asking for it and want to buy coverage, then we're hopefully going to be a bit more open to listing protocols in the future. So that's so we're kind of working through inbound on that side of things. And I guess there's also another piece to make you aware of. We're starting a syndicate called Unity Cover, and that's going to be focused on a few different things. But one of them is going to be launching a D&O product, so a directors and officers liability product. So this is more kind of for crypto. It's a real world coverage, but for crypto businesses primarily. And so it's kind of like TradFi coverage or TradFi terms, but for crypto businesses. And so we've kind of started really alpha testing that. We're running a few people through the underwriting process and getting some quotes out there. So that's we're kind of testing that behind the scenes with a few people. So if you're interested, please ping me and let me know. Or if you have any protocol teams that might be interested in this and haven't been able to get coverage, then let them know we're starting to launch this. It'll become more public over the coming weeks, etc. But we're just trying to test out the flows and make sure that it works properly. So there's quite a lot of different things going on, from new products, new syndicates, and things. And so I think it's going to be very interesting several months as we roll out all this stuff. And I think there's been a lot of stuff that we've been wanting to do that we haven't been able to really push on because it only made sense to do it after V2 launch. So now that that's happened and it's kind of we've got through the initial launch phase, it's going to be about kind of the hard work to kind of grow out the distribution base and sales. So it's definitely a switch from heavily engineering focused to ship V2 to a more sales focused to get some traction. And so that's kind of where the foundation is kind of shifting its focus. Happy to take questions on any of that. Oh yeah, one small last thing. Liquid Collective bought their first cover for slashing risk last week, so it was a relatively small cover buy, but they're looking to scale up their TVL quite a lot over the coming weeks and months. So hopefully, like if that happens, and we also grow with them. So that's a bit of an exciting one. And for those that don't know, Liquid Collective is a new liquid staking token, so like Lido, with a bit more of an institutional focus. So they're kind of like just kind of starting out. So hopefully that scales well, and and we kind of scale along with them. So that's quite exciting as well.
All right. Thanks, you. I think if there's no more questions, I will move on to a review of the last week in cover sales. So over the last week, we saw about 4.4 million in cover buys. For fees earned, the mutual earned $5,785 in fees. Since V2 launched, cover buys haven't been as robust, but I think with some work on the UI and some work to expand distribution, we'll see an increase in cover buys. But we've seen a large cover buy for Nested. I think it's been the better part of a year now that Nested has been buying cover for their entire TVL. So we saw another one there, nearly $2 million as their TVL has grown over time. We saw a very large cover buy for Euler Finance protocol cover and the Liquid Collective cover that you highlighted. And then we've also seen a cover buy or two for GMX and Aura, who we've seen pretty significant cover buys for them in the past. Cover buy for Kraken, and then a very small one for Uniswap V2. So as people build more on top of the protocol, and as distribution is defined for the staking pools that have recently launched, I think we'll see an increase in cover sales over time as well. And then some of the other things that we talked about with integrations and some other things that the engineering team is working on, we should see further distribution by third parties and individuals. So looking forward to sharing some more on cover sales as the weeks go on. I wanted to talk about a Dune dashboard that was recently launched. You can find a link to this in the thread for today's call as well, but the R&D and marketing teams have been working on several Dune dashboards now that V2 is live. And the first one that they've launched is the Capital Pool and Ownership Dune dashboard. This dashboard tracks quite a few metrics related to the capital pool. If you want to see a high-level view of the assets in the capital pool, they have some very nice views of that. You can see the value of the capital pool in USD, the value of the MCR in USD, the MCR percentage, the capital pool is split by assets. You can see information about NXM, the NXM supply, the number of NXM holders, the NXM distribution. You can see the growth in members over time, and then the book value per NXM in USD. The dashboard here has been created over time. It's one of the dashboards that these two teams are working on. Future DAO created dashboards that will go live in the coming month or so. There'll be a dashboard that tracks cover metrics, so it'll have granular detail on cover buys. You'll be able to see a breakdown of cover buys by cover type, and quite a few granular details for covers. There'll be a lot of nice graphs and everything in there too that show a nice representation of those covers as well. There'll be one on claims, so you can see claims history, analytics for payouts, a lot more detail on claims as well with more granular information. And then one for staking, so we'll see a breakdown of staking. We'll be able to see staking broken down by staking pools, cover sales for these staking pools, and then some metrics there as well. So these are all being worked on, basically just making sure the queries match with the V2 contracts. And once these are live, we'll announce these as well. But you can look at the Nexus Mutual page on Dune Analytics. That's where all of these future dashboards are going to be hosted. And that's where you can find the capital pool and ownership Dune dashboard as well. But again, you can find that in the thread for today's call. I just want to highlight some discussions on the forum. There have been some ongoing discussions about capital pool investment and management. Some of the people on the investment team have had posts up for a while, so talking about matching assets and liabilities. One from OSAT talking about potentially investing the capital pool in a Uniswap V3 ETH DAI pool. Dopey has one about potentially investing in treasuries and bonds. There is one from the Avant-Garde Treasury team talking about using the Enzyme Vault to diversify into different ETH staking products across staking providers. That one is a request for comment. There's some other ongoing discussions, like Hugh had highlighted the tokenomics design detail posted by Ray. He had originally requested feedback by the 31st of March, but if there's something that you want to share on that post, please do. Any community feedback about tokenomics is welcome. This is something that's really important. I know a lot of people have been asking about it. Getting involved and sharing some of your thoughts about some of the existing parameters and some of the existing design choices are going to be really important to get the tokenomics design detail across the line so we can get that over to the engineers. Chris from the Ease team shared some comments about improving the claim assessment experience and the cover wording. I provided some feedback on that, but I have some feedback that I've sent over to the engineers based on this post about improving some of the detail for people who are filing claims so that the experience isn't heavily tilted towards those people who are assessing claims. The DeFi safety and open cover V2 staking pool and roadmap. This was posted by Jeremiah from Open Cover, but it talks about the DeFi safety and open cover staking pool that was recently launched. You can find that in the UI, and you can read about their approach for the staking pool and their roadmap for distribution on the forum as well. And then the Ease team has shared their risk rubric for their staking pools. They have a couple that have been launched, and they've requested feedback as well. So if anybody has feedback on either of those posts from those staking pool managers, feel free to comment. But there's a lot of ongoing discussions on the forum, and I imagine there'll be more over time. If you're interested in getting involved on the forum or in governance more broadly, you can find resources about governance in the V2 docs. I've got a link in the thread for today's call as well. But be sure to get involved and read those posts on the forum. And then this point in the call is the open forum where anybody can comment, ask questions, bring up anything that wasn't covered. Just the one thing I wanted to note here is the engineers have been looking for feedback on the Nexus Mutual V2 UI. We have a thread in Discord where you can share any feedback. I have that linked in the thread for today's call as well. But you can also find that in the DAO forums channel. There is a discussion in there about feedback on the V2 UI. If you have any comments or if there's anything that you'd like to share, any improvements that you'd like to see, feel free to share those. If you come across any bugs in the UI, please report those in the bug reports channel. But I'll open it up to anybody else. Does anybody have anything they'd like to talk about or any questions? Anything? The floor is yours.
Yeah, just one thing from me as a token holder, just wondering what the timeline's looking like for the tokenomics update. I know you mentioned that you're walking through the NXM system price, but yeah, if there's any other guidance on the time frame, that would be really good. Thank you.
I can't answer that question. That's about the only thing I can answer. I don't know. We'll just continue giving you updates on the progress we're making as it's been made, and we'll go from there. It's it's a technical challenge. I think I misestimated the timing when V2 was going to launch by several times. So I'm not going to try again on tokenomics, especially given that particular sensitivity on stuff. So we'll just update you as we have material updates to share, and Ray's obviously going to do this the same. So yeah, I mean, it's not a small contract upgrade, it's big. So we are definitely talking months, so in several months. So it's not going to be necessarily a short thing that's going to come out in a few weeks or anything like that. It's going to take a chunk of time.
Okay, thank you.
Yeah, I think with tokenomics, there are still things that have to be discussed. I know a lot of people have been asking about discussions about the amount of liquidity that'll be seated in the virtual AMM, but the original parameters that we've highlighted on the forum that are in Ray's original forum post are really important, and there's some other ones over time, and I'm sure the engineers will share their view of the outstanding questions, the resources, and some of the things that they need to be involved in, and some of the constraints there as well on the forum as time goes on. But it'll definitely be a process, and like you said, it is a lot of work, but I'll be sure to share updates, and if you have any questions on the status, you can always ask a question on Discord or send me a message on any of the various channels that I'm on.
Hi, this is Rex from DeFi Safety. Just curious, all the NXM that you can see in the 9 staked pools, is that all the NXM that's available for cover, or is there still some V1 NXM that's available also?
So NXM that was staked in V1, that's in a separate contract for anybody who had NXM staked in risk assessment in V1, that's been unstaked, and you can withdraw that in the UI right on the homepage where you can see my holdings. So that doesn't transfer over directly into V2. People can unstake that from the V1, or they can withdraw that from the V1 contract, and then they can choose to stake and delegate or launch their own staking pool in V2.
So there would be an incentive, like in V1, their NXM isn't doing anything. So if they want it to earn some revenue, they have to move it into a pool, either their own or somebody else's in V2. Am I correct?
That's correct. Yeah, the NXM in the V1 contracts is just idle. It's not being used to underwrite any risk, and it just needs to be withdrawn. And then each member can decide what they would like to do with that NXM.
Do you
Absolutely.
know how much is there? How much is yet to be moved?
Not offhand. I could look at the staking contract from V1 and give you an answer on Discord here in a little bit.
Cool. That would be fine. Just curious, just trying to get an idea of how things will move.
Yeah, absolutely.
One other announcement, probably in about a month, DeFi Safety with Open Cover will do probably a different pool, which will be much more broad. The initial pool that we did was very conservative, just 5 protocols, but we'll have a rubric similar to what Ease has done. I think we'll be a little bit more conservative, and will hopefully be a bit broader with different protocols. And we'll be able to accept requests for new protocols. That's the goal anyway.
Yeah, that sounds great. Yeah, I'll be definitely reaching out to you and Jeremiah with some questions. I'm going through and interviewing some staking pool managers now, so looking forward to talking with you and writing up a blog post and sharing that with all the members of the mutual. Exciting.
Awesome.
Yeah, you mentioned earlier that for the Euler Finance hack, the funds for the claim flowed out of the capital pool, but no NXM was burned. Can you explain how that's possible, or did I misunderstood?
Yeah, so in V1 to V2, when the new contracts were launched and everything, the NXM in V1 wasn't automatically brought over to V2 and then staked. Because of the migration process and some of the complexity there, that just wasn't possible to do. And then we had a claim event that was directly after the launch of V2. The decision was made just because we couldn't burn that NXM that would be transferred over, was that any claims that were there, nobody would be forced to have NXM burned in the migration, because if your NXM is moved over into V2, it's not like you have the same functionality to withdraw. So you'd be locked in for 3 months. And because of that, it was just a difficult technical choice to make, but there just wasn't the bandwidth to be able to do that over time. I'm sure Hugh, if he has more insight on that decision, can weigh in. But with that, when claims were paid and a corresponding NXM for Euler wasn't burned. That being said, I'm working on trying to recover those funds for folks who had a claim payout and are also going to get a reimbursement from Euler. So I'm in contact with each member who received and redeemed their claim payouts. And once Euler finalizes the recovery process, I'll go through the process of trying to get the various claim payouts back into the capital pool where it's applicable. For those who received a full claim payout for their full loss, and then for those who received a partial claim payout for their loss, I'll have to look and see, if their total loss was greater than the claim payout, then we'll have to see what the recovery looks like and see what we can get back. But definitely going to make my best effort to get funds back into the capital pool so that everyone's made whole, or as whole as possible.
Yeah, just to add on the migration point, it was a massive technical challenge to do anything different. Basically, the stakers in V1 essentially got a freebie. And they earned the rewards, but for any claims that happen on covers bought on V1 that are still kind of active, they kind of get a free pass. And otherwise, we'd have to maintain the old system until it all ran off, and this was just and we didn't work compatibly with V2, so we decided to do it in a clean break style and effectively give a freebie to the stakers, which didn't seem like necessarily a bad thing because they've been core supporters of the protocol for a while. So yeah, that's kind of the reasoning behind it.
Okay, makes sense. Thank you.
Okay, I don't see anyone typing, so I will move and close the call. Thank you, everybody, for joining us. I know it's been a while since we had a community call, but we'll be back on schedule. We'll have our next call 2 weeks from today. I hope everybody has a wonderful day and a wonderful rest of their week. If you have any questions or you have any feedback on the V2 UI, you can do that here in Discord. But otherwise, we will see you in 2 weeks on the next call. Bye, everybody.